Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. As we sit here and talk on February the 19th, the market has logged in 7 straight weeks in positive territory. Will this be number 8? We're going to try and find out from our research director, Shiraz Mian, and stock strategists Tracy Reinick and Kevin Cook. So, Shiraz, what do you think? Week number 8 this week?
No reason to think why not.
It's a momentum market,
It's a momentum market. It's been going up for some reasons and against quite a few of them. Nothing seems to make a dent in the market's enthusiasm. Last week's momentum was kind of on the weak side, though. So one could say that since that we don't have that many catalysts this week, the earnings season is effectively over. We have a couple of housing reports and then a few inflation readings. So maybe last week's lack of momentum, when it barely eked out a positive gain, maybe telling us something, and maybe this is over. But I've been saying that for a while now,
right.
And
it still hasn't happened.
And have been really humbled by the market's gains. So who knows?
All right. Well, Tracy, you say not even the recent weak economic data out of Europe can put a damper on this market.
Right. I mean, it just wants to go higher. We got the president off playing golf. Sequester's coming up. No one cares. I think this week we're going to continue to see the rally. The small caps broke out again today to start off the week to another new high.
Yeah.
Small and mid caps aren't showing any weakness. That's kind of what I've been looking at. They did pause a little bit last week, as Shiraz indicated. They still managed to hit a new high last week, even with this, a little bit pullback, not really even a pullback, pause kind of thing going on. But this week, I don't know. I think everybody's, interested in being in the market again, and the momentum is there, and I don't see anything stopping it.
So Kevin, you've been watching the small caps. Recent outperformance there, you say, is a key indicator that there's more good news to come.
Well, it's indicative of risk appetite, especially for equities, right? And if money managers are piling into small caps, it means they're looking for growth, and it means they have an optimistic forward view of the economy too. This rally is the culmination of something I've been talking about for over a month, where all the conditions are finally in the right place, right? So you got all the political stuff out of the way, Europe's stable, China's growing again, and money managers have this psychological freedom to invest, so they just keep piling in, and every 0.5% dip gets bought. And that momentum is obviously continuing this morning as we're going to make new highs here above 1525 on the S&P.
Is the political stuff really out of the way? Tracy brings up a good
The
point.
market acts like it is.
But that's exactly the question. Sequester is right around the corner as far as the March 1st deadline is concerned.
And the market is looking at the progress we've made, from on December 31st and January 2nd, a significant shift happened where it looked like Washington functioned enough to get out of the way of the markets. And the way things are, and then in January, the GOP sort of rearranged the schedule to detangle or disentangle the debt ceiling issue from this, and the market loves it. Now, are we due for a pullback? Of course, but the thing is if there are a lot of bears on the sidelines or bears reinstituting their shorts, they just did all that for the past 2 weeks, and now they're having to pay up to get out of them, and there's still money on the sidelines. So. The path of least resistance is probably down, but we could still shoot up to S&P 1540 before we see anything like a 3% pullback.
So why is the market ignoring the sequester issue? Is Kevin accurate that
this is the Fed? This is the Fed. In the last 6 weeks, Fed bought more bonds than the Treasury issued. And they're not alone. They have Draghi has his OMT. The Japanese are getting started. The British Central Bank has its own program. There's a flood of liquidity coming into the market, and whenever you see that, it pops up in one of the asset classes. This is the equities turn right now, and that's what we are seeing in the market.
But is the monthly tally that much greater than $85 billion, which we already knew?
Well, the amount of debt issuance by the Treasury was less than the amount of bonds that.
So there's some excess liquidity for the market to sop up.
It's way too much liquidity. And just to get back to the political question, I was surprised in December when the market was not concerned about the looming fiscal cliff. I mean, yes, we did not make a lot of gains in December, but we did not resolve the fiscal cliff issue till January 1st.
Right.
We did not see a sell-off in December, and then we have been partying like never before in the new year. So there's way too much optimism. Maybe the market is right. Maybe the optimism is warranted. But the political risks, the market has essentially shrugged them.
So, Tracy, you think that's why the market is shrugging off the sequester issue, just over optimism?
Maybe. I don't know. They've managed to always figure out a way, even if it's right before the deadline, like they did in the fiscal cliff issue.
Or right after.
Well, yeah, but they managed to figure it out. So I think everyone is assuming they'll figure out something, or maybe even the sequester cuts might go through, and some people think that that could be a good thing, that we need to have these things happen. So, yeah, they're not concerned at all so far about the government action.
Let me throw this out there for consideration. S&P's been in a real tight range lately, although stock market, as we said, up nonetheless, continues to rally this month. But other major world stock markets are down, and some down quite significantly. You've got Brazil down 3%, Mexico down 3.1%, Germany down 1.7%, just to mention a few. Some would say this indicates a decoupling of our U.S. market from the rest of the world. I don't like to use that phrase, decoupling. It just seems like an ugly word to me.
That's a good phrase. No, that's a good phrase. Don't stop using it. I think, notwithstanding the doubts that I was raising about the rally, there are a bunch of positive things happening on the U.S. front that are not happening elsewhere. So Europe has, Kevin rightly referred to them as stabilizing, but Silvio Berlusconi is the number 2 now in opinion polls. The Spanish Prime Minister, who's been in office just less than a year, or maybe just about a year, is fairly wounded, and he needs to implement a lot of stuff that the Germans and the ECB and the IMF want them to implement. And then let's not forget, the Germans go to polls later this year too. So there's a lot of political uncertainty in Germany, not to mention the recession that they are in. And everybody's hoping that they come out of it in the second half. Then 2014, it's very,
we should add that this morning there was another poll of German investors, and that was the ZEW, which was very strong. I think it registered 35 last month, came in at 48, way above expectations. So we got the worse than expected GDP last week for the Eurozone. Yeah, the DAX is down, as you mentioned, but to see this business investor confidence shoot up like this is really surprising.
Although researchers will tell you that does not always correlate with economic growth in a region. So, Tracy, you even wrote recently about a 16-year-old actress who is day trading from the set of wherever she's working.
Right. That made me a little nervous. I saw 2 articles last week about 16-year-old day traders.
And they're making money probably, right?
They are. The one who is an actress was made like 34% on her day trades last year, easily beating the S&P 500. Someone should hire her. But, that you start to get, when you get the day traders and how great they are doing during what is, this is one of the 9th largest bull markets if you go back to 2009. Mm-hmm. And then, you get these quotes, oh, it's so easy, everyone should be doing it, and I love it. And she said she's on her phone trading from the set. Those are the kind of stories that do start to make me pause, because it is like the taxi cab driver giving you, or the shoe shine boy giving you tips on the stock market.
Right.
But right now these are just kind of starting to trickle out there. So I'm watching for more things like that. But yeah, little signs are starting to make me a little scary that it's getting too easy.
All right, we have to leave it there. But don't go away, because these folks are going to stick around to give you their top picks for the week. And that is in our next segment, which you can click right to right now.